What's up, everybody? Michael Silva here. You're watching episode 11 of The Weekly Scan. The Weekly Scan. The Weekly Scan is all about finding opportunities in the stock market for the week ahead. In today's episode, we will be discussing the technical analysis side of 6 different stocks, looking at supports, resistance, entry points, exit points, targets, etc., etc. Now, as for a quick disclaimer, these videos are for educational and entertainment purposes only. I do not have any of my own money in these stocks at this particular point in time. So with all that said, let's go ahead and hop into today's show. Welcome to the computer. We are now going to go over the 6 charts that came up on the scanner. Let's go ahead and get into it. The first one that we're looking at is ticker symbol ERI. That is ERI. Now, when I go through these, I'm going to just look for support, resistance, and then tell you kind of how I personally would probably trade it. Once again, as a reminder, I'm not actually in any of these positions as of right now, and I may or may not get into them. So just keep that in mind. This is just for educational and entertainment purposes only. Let's go ahead and hop into this ERI Eldorado Resorts Incorporated chart. What I see right out of the gate on this is, earnings seasons just really happened, and this candle right here, I'm pretty sure was the, that was the earnings day, and notice how it gapped up. That's called kind of like a peg, or people call it a peg, traders call it a peg, power earnings gap. So that was a power earnings gap, and it happened to be at a very specific area. So if I go ahead and draw out here a line at the $20 range, you'll notice that it gapped up above this pretty significant prominent area of resistance. So now when resistance is broken, it then becomes support. And as you can see, it came back this way and then retested that 20% or the 20 trend line right there. Or sorry, not the 20 trend line, the $20 area of support. And now it's kind of moving up. Now, I also see that there's some decent volume on that power earnings, and it's kind of tapering off a little bit, which is normal on a breakout because you'll see the big break and then you'll see a retest and then move higher. So I think that this potentially has the opportunity to go higher. The MACD is, it's bullish. I mean, it's losing a little bit of momentum, a little bit of speed, but as you can see, it's just been on this nice steady incline up, and it has a decent spread between the two lines, and it's above zero hardly. So it has some room to go, and if you can look back through the history of the chart, there's really no resistance other than the 200 period moving average. So we're talking like, I mean, obviously it'll catch some like in certain areas, but like 30, and then definitely the $40 range where the 200 period moving average is. So I really do like this setup a lot. Now keep in mind, this is an extremely volatile, fast moving stock. So what I mean by that is if you look at the y-axis, from this point to this point, there's a small candle, and you can see the candles are sometimes that size. That's a $5 per share move. So keep that in mind when trading this type of stock, or if you're holding anything overnight. So how would I play this? Well, I would like to enter in probably around the $20 to $21 range in that area. So I would hope for a little bit more of a pullback from this point. And then I would have somewhat of a tight stop loss. So it would be nice to get the stop loss below the 50 period moving average just to be safe, and then move it up as time goes, as new candles form. But keep in mind, it is an extremely volatile stock. So the 50-day moving average is like at $17, and then you have the buy-in entry at $20, $21. So you're talking about a $3 or $4 per share difference there. But keep also this in mind. So if you're going to risk $3 or $4 per share, it's to potentially earn, up to $20 per share. So it is a really good risk versus reward setup. Just note that if you're going to lose $5 per share, you don't want to just go buy, 100 shares, because that means you can lose $500 on something like this, right? And if that's a lot or a little to you, I mean, it depends on your risk tolerance, but you got to keep that in mind if you get stopped out. The only thing that we can control in the markets is our risk. I say that often, and it's true. All right, so that is ERI Eldorado Resorts. Let's go ahead and move to the next one. All right, here is ticker symbol APT, Alpha Pro Tech. This should actually look familiar to some people that watch the weekly scan because it's been on
my weekly scan before, and it's been really just trending sideways. Now, this is also a very fast-moving stock. If you look at the y-axis, it goes from 20 to 22.50 in a very small move. So $2.50 per share on just a small move on the y-axis there. Now, what I see is this. I drew this out on the previous charts too, but you can see a clear trend line right here, and then a clear trend line. I mean, I can draw from down here. It's basically the 50-day period moving average. I'll just draw it all the way. Basically like that. So it's been in this thing, and now this previous day, not this day right here, that was like a pullback to a retest of the trend line. But this day, boom, boom, boom. That day, that was a big volume day to break above the trend line. So the question is, are we going to see more of a move now to the upside where we might potentially see it reach, I would say this would be an area, so the $20 range, and then also the $25 range. Will that be enough to start seeing momentum push more to the upside? If you look at the MACD, it's kind of hard to see, but it did cross over and looking like it is going to start expanding to be a little bit more bullish. But it's going to be time will tell on this one. So that's what I have for APT. I would personally trade it on this. I mean, depends on where it opens on Monday, but I wouldn't mind getting in. If it comes back to the 50-day moving average, cool. I'd like to enter in or scale in around this area, and then have a stop loss pretty much below all of these previous candles here. So all these candles here, I'd have the stop loss below it because you want to hide behind that wall. And then I'd potentially, the upside could be all the way, up to this range, the 27. So another just really good risk versus reward. Notice how I'm only risking X amount to get that amount. That's the beauty of trading. You manage your risk. That's your reward, and this is what your risk is. So yeah, I like this little setup. It does look like it might be starting to build some momentum to the upside now. But time will tell. Time will tell. It's still early, but time will tell. Let's go ahead and move to the next one. All right, here's ticker symbol CDLX for Cardalytics. Another very interesting play around the power earnings gap, the one kind of very similar that we saw first. This right here was the day when the earnings came out, and it had this kind of gap up. It was pretty significant. As you can see, the day prior opened here, closed here, and then gapped up all the way up here. So a nice big earnings gap, and it happened to be at a very interesting area. Right here at the, I would say 50 to just above 51. Notice how this is a very prominent area of resistance that now can act as support. So it was resistance here, basically resistance up in this area, almost touched it, resistance, 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 and then it's been kind of trundling around this area. And then these previous 2 days, so as you can see, the power earnings gap, it pulled back to retest this line, pulled back a little bit further, right? And then it started moving up. And this candle right here is kind of a reversal candle, a little hammer candle. And then it bumped above and closed now above the $50 area. So the question remains here, where can it potentially go to? And if it does carry out its momentum, the very first target is very prominent because, like, look at this gap. It would be kind of a gap close or a window close, $75. So there's going to be resistance up in other areas. Like, for example, right here had a lot of resistance, and obviously, like over here had resistance, basically right around the $60 range. So there'll be more resistance, and you could take profits along these areas. But how I would play this is, if it does pull back just a little bit more, like in this range, I would like to enter in here, have a tight stop loss, maybe here or even potentially below this previous candle. Depends on what your risk tolerance is. But let's just say you're going to risk about this much, this blue dot here, to potentially gain that much. So another really good risk versus reward setup. You're risking, 1 to earn 3, and you could take profits along this path. But yeah, another good setup. It does look like we might be starting to see a breakout. Now, the markets obviously have been very volatile, very crazy, very choppy. So you got to keep all that into consideration. Just because we're looking at this one specific chart doesn't mean that the other side of the market doesn't affect it. So keep that in your mind. All right, we are here at the next one, JCP, JCPenney's. If you've been hearing the news, they filed for Chapter 11 bankruptcy. But that doesn't necessarily mean that the stock is going to get delisted right out of the gate. It very well may, so you got to always keep that kind of stuff in your back of your mind. But that's more fundamental. Let's look at the technicals of it. I've used actually JCP on previous previous weekly scans. Actually, it was probably way back here when I drew a trend line like this, and I thought it might potentially break out to the upside, and it kind of did. I can't really remember though, but I think that's what it was for. And now, I mean, this trend line, as you can see, it was very similar, and it broke out and kind of got stuck up in this area and is retesting the trend line. So let's look for an area of resistance now, which is very prominent. It's right here at the 30 cents. If you can notice, it's been pulling back, and it came and it got rejected in this area twice. And now it's coming back here. So this may be a good play. If you can pick up shares down here, have a tight stop loss under 15 cents, right in this range right here. So you'd be risking this much. And then you have all this upside potential to gain it. But that's not even the end of it. If it breaks above 30 cents, you can really see a big move up because it's just a very strong area of resistance. Now, you can play it like that, or you can just keep an eye on this and wait for it to close above 30 cents to really give you the clarity and, confidence that you might see a higher move. Because once it closes above 30 cents, you might get a retest, but then you could definitely see it move a little bit higher on the chart. And if I look over at the volume was very significant, a very, very big trading day. This stock has been on a lot of traders' mind. It's been hitting mainstream news. So, play this one how you'd like. I like speculating. If it can come down here, then I just would have a tight stop loss. And if I get stopped out, I'd be like, I don't care. And then maybe if I do see it eventually coming up to the 30 cent and close above it, then I might play it. But yeah, that's JCP. Pretty easy, pretty simple, pretty quick, pretty fast. Here we go. On to the next. All right, so here is ticker symbol PLUG, plug for plug power. Cool little setup right here. Nothing too crazy, nothing too fancy. The indicators aren't showing us all like just too much. The RSI is flat right at around the 50 range. The MACD does kind of point down a little bit and is below 0, which is fine and normal, but what makes me, this is a lagging indicator, right? So what I like about the current price action day is where it bounced and the candle that it formed. So it formed a nice hammer candle on the 50-day period moving average inside of an interesting pattern. And that pattern, if you just draw it out like this, boom, boom, boom. It's kind of like inside of this little channel, sort of wedge, triangle, whatever you want to call it, or even potentially like you can call it maybe a bull pennant, But notice how it like broke above, it retested here, came, and then and then it's kind of ping-ponging back and forth, and then it just touched the end of this trend line here. So how would I play this? Well, if it can pull back more, I would love to enter in around this range right here, and speculate the breakout of it. And then I would have a stop loss right below 375. Piece of cake. So I'd enter in throughout this range, have a stop loss below 375, and then you can have, potentially gain that much. So it's kind of 1 versus 3, but if it breaks above that trend line, then you might see a lot bigger of a move. You might get resistance at 475, but then you might get some more over here at $5 range. So this is also just a very good risk versus reward setup. Not much else to go on this one. Let's go ahead and hop into the next. All right, so this is the last chart I'll be going over. It's ticker symbol ACOR, ACOR for Acorda Therapeutics. I actually posted this up on the community post within YouTube as far as like a double bounce pattern, and I just wanted to bring it back up again because there's a couple things that obviously I didn't mention because it was just a little post, it wasn't a video. But yeah, it was a double bounce, and then I did it on this day specifically right here because of this volume. I got notified by that volume. And then the very next day, it bounced up, a very nice bounce from the low of 70 to, above 80. So if you caught some of that, that was a killer trade. Now, it formed another hammer candle on this day right here. And notice how there's a lot of volume and then it tapered out. So it broke up and then kind of came back down for maybe testing this bottom of the 70 cent range again. Now, I like this setup because of the fact of the short float, and I wanted to share that with you. The short float is pretty high, 30%. That's very high. And then the days to cover are 8.7. Both are pretty high. When I look at the RSI, it is kind of in oversold territory in the 37, 30 range. It's not giving us all too much data, but it's something to take note of. The MACD does kind of look like it wants to start curling a little bit over. It's losing a little bit of volume to the downside or momentum to the downside. So we might potentially see a bounce. And this hammer candle makes me think that, hey, if it does, that'd be great because of the short float. If we can break above specific areas of resistance, like for example, this is an area of resistance right there. This is an area of resistance right here. So if we can break above this, even the 50 period moving average, the shorts are going to have to cover. I don't know. You got to think, like, where are their stop losses? So if you're shorting this stock, where would you put a stop loss? If you were really kind of letting it go, I would say it'd be above the 50-day period moving average, or maybe even actually in right here at the $1.20. But that'd be a pretty significant, stop loss. So you got to think, what would traders typically do in this? Where are their stop losses? Because once those stop losses are triggered, you can really see a stock like this start moving because they have to cover. And when they cover, they're buying shares back. And then you have the momentum traders see that momentum, and then it starts kind of compiling itself. So keep an eye on this one. This can really take off if the shorts end up having to cover. I wouldn't have my stop loss much lower than 70 cents, but I would say, yeah, you can pick up some shares and then just kind of be patient and hope that the shorts do get triggered and it shoots up to the upside on you. All right, guys, that's all I have for you on the weekly scan. I will see you probably on Monday on a live trading video and an S&P technical analysis update. Or if you just watch the weekly scans, I will see you next Saturday on the weekly scan. See ya.